Hello, this is Pat Walker at MissionWinners.com, and I hope you're all doing great on a weekend. It's good to have weekends to get away from all this, the joys of it all. And I'm answering a question for a new VIP, Tree. And the question is, she has 3 questions. And by the way, I encourage all of you, please ask questions. I'll either do it by typing, text, or I'll do it by a video, whatever you prefer. I want to do it justice. Tree, welcome to the team. Here's a question. Do you keep a running list of current longs? And actually, I monitor current longs, but I don't keep a running list. And I will tell you why. I literally don't buy every stock that breaks out. I can't. Why? Because I couldn't follow all of them. And so the key list is a great shopping list. Every stock on that key list is a stock that I would personally buy. But at times, I may not be able to because I'm wrapped up in something else and I may have too many positions and I just can't keep going. It'll get to be too much. But the key point is this for everybody. The key list is a great shopping list. Every stock on there is one that I would do. So I stress, if I ran a running list, it really wouldn't be relevant or relative because it would be different than what other people have. And they say, well, geez, I own a stock from a key list and it ain't on there. What the heck's the use? But what I do is this. I will follow these stocks. When a key list stock triggers, even if I don't buy it, I still keep following it. Why? Well, I feel responsible. I don't want to sit there and have something happen. It's like, geez, man, this is a bummer. Look at this thing dropping. So yes, do I always have alerts set on these? Yes, I do. I keep watching them. And I look at them during the day. Why? Maybe they'll lend another buy point that I can get into. Or if not, a buy point where somebody can add. So that's the way the key list works. I literally don't own all of them. I can't. And I think you can see that even in the short time. You get up to 30 stocks real quick. So that's the way that works. The next question that you have, and it's a great question. Do you have price targets for tearing out of a trade? And no, I don't have specific price targets, but what I look for is price and volume action, and I will sell some into strength after it's made a decent move. Why do I do that? And I'll be very, very blunt with you. In 2008, they eliminated the Uptick Rule. The Uptick Rule was a rule, and if you want me to really go in depth with it sometime, ask me in the VIP feed and I will. I'll make a separate video on it. The Uptick Rule was put in place after the crash of 29. It was part of the Securities and Exchange Act of 1933 and 34. What did it do? It prevented bear raids from happening, where syndicates would gang up and just drive stocks down in price. They eliminated it in 2008. So what happens? Guess what? These stocks can drop like a dang rock. They gang up on them because there's no uptick rule anymore. So what do I do to minimize that impact on my investing? I will sell some into strength, normally in 10 or 20% increments. Why do I do that? Again, so that I don't get stuck with something dropping on me like a rock and I round trip it. So after it's gone up, I don't know, 5, 10, 15%, I do take a little bit off. Just a little bit. How much? 10 or 20%. If it keeps going up, I will sell a little bit more. After, and this is very important, after it has moved up in price and it's trending, I mean grinding up steadily, what do I watch? I watch the 8-period exponential moving average. That is the yellow line in this chart. You can see it right here. As long as it keeps trending, I will stay with it and just let it work until it starts losing that line. In fact, I'd like to do something here. A picture's worth 1,000 words. I want to share this with you right here. This was Square last year. And I even left it on here when I slid this back. My entry was right here. This was a keyless stock back in October. We sold a little bit into strength and then it meandered. We sold a little bit more and then it just walked up the 8-day. And as long as it kept on going, we just stayed with it. I would put a limit alert on it, but it got to the point where it was up in this range, I didn't even have it on my front page anymore. I'm not going to watch it. I would just put a limit alert in, like here, a price alert. Not a stop, but a price alert. Let's suppose it was right here, and it's doing this. I'll put my price alert right here. You see that little red line? It's like, yeah, if it starts losing the 8-day, maybe I'm going to take some off. Well, the next day it goes up. Next day it goes up. Well, what am I going to do? Raise the price alert. Watch this little red line. Boom. There it is. Goes up. Everything's great. Goes up. Does everything great. By the way, I was posting on Twitter, on the big feed, pointing out that it's starting to go parallel. I could see it. It was starting to go parabolic. And I said, sell more into this. When you get something that's been grinding and then the slope of the line starts, the rate of ascent picks up, that's called parabolic. You probably know that. And I will sell more into strength. After I have that good gain though, once it loses the 8-day on this with volume, I will sell more. But I won't sell all of it, just more. Cut support at the 20-day. And I say to myself, as long as it hangs around the 20-day, I'll keep some. Well, it gaps down and it closes here, so we're still okay. And then finally, we got this. And that was the trigger, losing the 20-day, to take the rest off. And there you go. That's what we did. So that's question number 2. Do I have price targets to tear out of trades? After it's made a decent move, I will monitor the price action on the chart and price and volume action on the markets to see if indeed I should sell some. I also, and this is important, this is where we connect the dots. Stocks don't operate in vacuums. If the market's really getting whippy, I will be faster to sell some off into strength. Why? Because the market has a profound, and you know this, we all know this, the market has a profound impact on the movement of a stock. When markets get whippy, I'll take some off a little bit faster. The last question is this: do you short or just step aside? Yes, I do short, but do I do it with individual stocks? By and large, no, I do not. I will do it with the inverse ETFs, the 3 major inverse ETFs. I'll stick with those. Why? Because I have seen you can be short a stock and news comes out and the thing gaps up and you get killed. So shorting individual stocks, I don't do very much, hardly at all. But I will buy the inverse ETFs on the Dow, the S&P 500, and the NASDAQ. I really don't do it on the Russell 2000, but I will do it on those 3. The Dow, the S&P 500, and the NASDAQ 100. Those are the ones I'll key in with the ETFs. And I hope that helps you, Tree, and I thank you for the questions. And we're going to get this video out here today so that you all can watch it. Thank you so much.